Hi there, this is Alvin from Dr. Wealth. If you have been following Charlie Munger, you have known that he has a very big position in Alibaba, and that's via the company Daily Journal Corp. So in the last AGM, he admitted that Alibaba was one of the worst investing mistakes he had made. And he said that the reason was because he thought that Alibaba has a very captive audience in China as an internet company, but only to realize he's just another retailer. And to him, retailers have a lot of competition and it's not going to be very easy for them to grow from there. So in this video, I want to give you more insights into the competition landscape, but not just in China, but internationally as well. That extends to Amazon, not just to Alibaba, right? The incumbents are actually getting disrupted by newer players in the e-commerce space too. First, let's look at the landscape in China. The two oldest e-commerce companies in China are Alibaba and JD.com. In fact, JD.com is older than Alibaba by a year, and that was only when I started to dig out their age that I realized the difference. The other players are all quite young, less than 20 years in existence. Okay, so we have Pinduoduo 8 years, VIP Shop 15 years, Xiaohongshu 10 years, Douyin 2 years, and Kuaishou 5 years. So in particular, I want to mention Xiaohongshu, Douyin, and Kuaishou because these three companies or platforms did not originally do e-commerce as a business. So they were more like social media site, right? So Xiaohongshu is like an Instagram in China, sharing a lot of photos, videos. And that was where they realized that, hey, we can also move into e-commerce to feature some products, allow people to buy the merchandise on the platform. So similarly, Douyin and Kuaishou did the same as well, right? The short video format has really garnered a lot of users and they are always thinking of ways how to monetize them. And moving to e-commerce, allowing the influencers to sell their products and merchandises directly on these platforms make a lot of sense. So we can see here that it is not that Alibaba, after they cornered the majority market share, they just won the e-commerce space, right? They just dominate the e-commerce space. So it is not really true, right? We still see on and off a few years, we have a new player coming into the space, and now we even have non-e-commerce startups going into e-commerce, trying to take a pie out of Alibaba as well. It is a competitive space, and I believe that there will be more e-commerce platforms coming in the future too. So that's why Charlie Munger said this is not a walk in the park anymore. If you look at the market share, just let me blow it up for you, right? Alibaba is still number one, but it cannot rest on its laurel right now, right? Because the pie is shrinking. You compare the 21.9 on the left to the pie chart in 2021, you can see that the Alibaba dominance, the market share has shrunk. Yes, Alibaba did grow over the years, but the growth rate has also been slowing. Meanwhile, the other competitor like Pinduoduo, the third place e-commerce player in China, have managed to more than double their market share in that 2 years. This is why I think that the incumbents are facing a lot more challenges as compared to the past. And there's a strategy, even within the whole big e-commerce space, there were niches that some of these newer players can come in. And Pinduoduo has a very clear strategy, and that is to target the less well-off consumers in the third and fourth tier cities in China. Because of the large rich-poor gap in China, that's how Pinduoduo carved out that space for itself. And they have succeeded by encouraging group buying to lower the prices such that these less well-off consumers can afford them as well. And it's clearly working, as we can see that the market share has doubled in a few years. And it's also evident in their growth rates. So if you can take a comparison in the third quarter of 2022, Pinduoduo was still growing its revenue 65% from a year ago. As compared to JD.com and Alibaba, they have really slowed down tremendously. JD still managed to edge out 11% gain, whereas Alibaba was only growing at 3%. So you can see that the bigger incumbents are growing slower, the smaller players are growing faster, and that is why the market share for the smaller players have been enlarging. And if we look beyond China, right, internationally, Alibaba has a lot of challenges expanding in other countries too. They only managed to really break into two regions. One is in Turkey by its subsidiary Trendyol, and in Southeast Asia, which is Lazada. But even for Lazada, it used to be number one in Southeast Asia, but currently it has ceded that throne to Shopee. So now Lazada is number two. So we can see that even international expansion for e-commerce is not easy. The reason is also because in every region, there's already a very dominant e-commerce platform. So Amazon is very strong in US, North America, Europe, as well as India. So they are number one in a lot of all these countries in these regions. And in South America, we have Mercado Libre. And in Africa, we have Jumia. In Southeast Asia, already mentioned, is Shopee. And in Australia, is surprisingly eBay. So there is already an incumbent there. That's probably why Alibaba find it very difficult to challenge all these incumbents all at the same time while they are fighting the market share domestically. And Shopee also gave us a very good lesson, right? So they were aggressively expanding in multiple countries at once, and within a few months, they had to pull back and cancel all their expansion plans. So for e-commerce expansion in other countries, you need to fight an existing incumbent, an existing big player, which makes it very, very difficult and challenging. And I would say that it's particularly challenging for Chinese company for a couple of reasons, right? So for one reason is that China is a very protected market. So they are able to prosper in China because the foreign competition were warded off, right? Because a lot of foreign companies find it very difficult to enter the China market because the government is very unfriendly to the foreign companies, which means that for this Chinese company to move out of China, to expand in other countries, they are not accorded that kind of protection anymore. So that makes them a lot less competitive, possibly, right? They need to really figure out, without that protection, how are they going to find a market space for themselves. And the second reason is also because for China company, the increasing anti-China sentiment around the world, especially in the West, has been growing, and many might boycott any companies that are based in China. So those are the two reasons that I think is particularly challenging for Alibaba to move out to other countries and expand in those markets. But that said, there are Chinese-based companies that have shown successes in the US. So for example, Douyin has a sister company, which is TikTok. The TikTok is the international version of Douyin, which is the mainland China version. And they managed to be successfully globally, not just in China. So very few companies from China are like this. Okay, so most of them are only successful in China, but outside of China is non-existent. And for Douyin and TikTok is an exception. Despite all the anti-China sentiment, TikTok can still get the traction, can still get the popularity among a large pool of consumers. And another example will be Shein. Right? You might have heard of this company. It is a fast fashion company, and it has surpassed big fashion brands like H&M and Zara. Right? So it is a Chinese-based company, and they only sell outside of China, and it has gained a lot of popularity in US. It's not impossible for a China company to expand overseas. Probably it takes a very careful strategy, a lot of very good tactical execution, as well as a large dose of luck in order for a Chinese company to break into the foreign markets. And I also find it interesting that Pinduoduo has also achieved this foreign expansion into USA. And they have another brand called Temu. And it's creating a buzz among the consumers over there. So the strategy was very similar with Pinduoduo, and they go for the more cost-conscious kind of customers. And sometimes the prices were so low that it became a viral piece of news by itself, right? The customers start to share, hey, this is so cheap. The earbuds from Lenovo is less than $10. You can get it. So it created a lot of buzz in that sense, right? So which means that you can see Pinduoduo seems to be very good with their strategy, with their market entry approaches, as well as their tactical execution, right? So that makes Pinduoduo the next company to watch that is able to replicate the success from China to the rest of the world. And this is the ranking of the most downloaded shopping app in USA. And you can see Temu is number one. Okay, so it has surpassed Shein as well, surpassed Walmart, Amazon, and AliExpress is really down the line. You can see that the results is really very impressive, and it remains to be seen whether they can continue to stay at the number one spot, retain its users, or even grow its user base and get more of them to spend, right? Increasing the gross merchandise value transacted on the platform itself. Some were saying that is it possible for Temu to topple Amazon, right, in the US? Because Amazon has been the very strong incumbent in North America, as I mentioned just now. So can Temu have that kind of ability to do that? I think it's too early to tell, right? Because Temu has just been launched last year. It has been around for less than a year, and it still remains to be seen whether it can really grow from here, or is it just a fad that eventually will go away. Okay, but it looks promising because Shein has done it before, TikTok has done it before, now we have Temu. So it is possible that it can gain a foothold in the North American market as well. But definitely the revenue is not up there to compare, right? Amazon is still number one, okay, in terms of e-commerce revenue. Just a note on this is that they are not the same, okay, in terms of the revenue. So for Amazon, because they sell the product, right, the revenue is closer to the GMV value, okay, the gross merchandise value. As for Alibaba and Pinduoduo, they don't really sell their own product. They're more like a marketplace. They let sellers sell their products directly to consumers, and they take a cut. Okay, so which means that their revenue is not based on the GMV, and that's why it looks a bit lower. So that is the misleading part. But regardless, Pinduoduo, which with Temu under it as a subsidiary, is still not significant in terms of its revenue to compete with Amazon in North America at this point in time. So to conclude, I hope you can see that the e-commerce space is really competitive. There are incumbents that already cornered large market share in every region, but the incumbents are also not that safe, right? Because there are new players coming in, taking a slice, using a very targeted approach for pool of customer and trying to steal market share from the incumbents. And some of them, like Pinduoduo and Temu, seems to be successful with that. And with all this competition coming in, it's very difficult for e-commerce companies generally to grow very easily, to make very fat margins. And that means that fundamentally their numbers may not look so good in the future years of report. Investors don't like competition, right? Businesses don't like competition because competition kills profits. And unfortunately, e-commerce have gravitate towards this situation, and that's why I don't think e-commerce is as lucrative, as attractive as an investment going forward from here. So I guess that's what Charlie Munger is trying to say, right? So hope you get a better understanding about the landscape, review your investment thesis, and it might change your decision, right? So hope you like this video, give me a thumbs up, and remember to subscribe to the channel, and you'll not miss another analysis like this. Thank you, and goodbye.